Welcome back to the SharmaFX Weekly Market Outlook. If you're a Forex trader, gold trader, day trader, swing trader, we're going to go through everything that you need to know to prepare for the upcoming week. Last week on Friday, we saw one of the most aggressive cross-asset rotations in recent years. We saw that gold and silver went parabolic, then crashed, Forex volatility exploded, and stock indices like the NASDAQ and Dow Jones are still choppy like nothing happened. So that tells us something very important as traders, and it's that risk didn't just disappear, it rotated. So this upcoming week, our edge is going to be market structure, liquidity, and price action. So let's go over first the macro fundamentals that are driving Forex, gold, and indices, then the market positioning and the institutional sentiment, and then finally the exact price action levels that we're going to be watching for gold, major Forex pairs, and stock indices this week in the group. Starting off with gold and precious metals, gold and silver weren't just trending higher, they were being driven by momentum trading, speculative positioning, and CTA flows. This article by Bloomberg highlighted strong speculative demand, especially from China, combined with options-driven buying. That matters for us as traders because once a market becomes parabolic, it stops trading supply and demand and it'll start trading positioning. The catalyst came when Trump floated the idea of nominating Kevin Warsh to lead the Federal Reserve. That strengthened the US dollar narrative and triggered a forced liquidation across gold and metals. This next article tells us that volatility is no longer in equities, it's in Forex and commodities. Stock indices remain relatively calm, while gold, USD pairs, JPY pairs, and oil are seeing sharp price swings, and that tells us that risk is being expressed through macro hedging now and not equity panic. Up next, we have some Euro news here. The euro strength is now becoming a policy issue for the ECB. A stronger euro suppresses imported inflation, which means that the ECB may eventually lean more dovish if euro continues to get stronger. Our fourth layer here is geopolitics, where tensions around Iran and Hormuz inject event risk into oil, inflation expectations, and safe haven assets like gold and JPY. Finally, we have our final layer that the market is pricing in and that we're still dealing with as traders, and that is the US government shutdown risk that appears limited, but it adds uncertainty in a week that's already including major economic data like PMI tomorrow from the US during the New York Stock Exchange Open. And then we have interest rates coming out from Australia Central Bank. And then on Tuesday, we have the JOLTS job openings coming out from the US. Wednesday is going to be ADP data that's coming out from the US again around New York Stock Exchange Open with ISM Services PMI. Thursday is very heavy with interest rates coming out from Bank of England and ECB. And then on Friday, we have NFP data coming out. So it's a pretty heavy week. And the bottom line here for traders is that we're entering a week where markets are going to be super sensitive to macro headlines, central bank expectations, and Forex volatility. How do you translate all of those fundamentals into market sentiment? Now, let's go ahead and talk about that because sentiment drives the short-term price action that we capitalize off of as scalpers, day traders, and swing traders. Gold and silver sentiment just shifted from momentum-driven euphoria into forced liquidation. Now, that doesn't automatically mean a long-term trend reversal. It usually means range building and two-way trading. The US dollar sentiment is supported short-term by the Warsh narrative and the idea of a Fed regime shift. The Japanese yen sentiment is extremely sensitive right now. Intervention risk plus volatility would mean that USDJPY and GBPJPY will trade cleanest at clean levels. So that's what we need to pay attention to when we're trading those two pairs. Equities still remain more earnings focused than macro driven, which explains why indices like NASDAQ and Dow Jones are choppy instead of crashing right now. So our mindset going into this week should be that we're still not predicting the market and we're going to continue to react to price action and trade structure and liquidity. Now let's go ahead and move on to the technical side, starting off with gold. When we drop down to some of the intraday levels, we see that gold printed a classic blow-off top near the 5,600 level, followed by a vertical sell-off. And that was not a normal pullback, but that was actually the liquidity-driven liquidation. Now, price is stabilizing near this 4,700 area, but structure on the lower time frames is still bearish until price can hold on to a support and then continue pushing back down or pushing back up. Now, that doesn't mean that structure has completely changed and we're bearish completely for the long term on the higher time frames. Because even when you hop up to the higher time frames, you can see that massive rally up. So this pullback that really just happened, even though it was a forced liquidation, it in a way kind of corrected that massive rally up. So that's why we're sitting at a very key level of around 4,700 to 4,600. And we need to wait for confirmations to see if this is going to be a continuation right back up. Let's come down to the 4-hour time frame and mark off some of our key levels. First of all, it's going to be our 5,600 level, or even, let's say, 580, which should be the top wick projections right there. So that's our major top. We have our supply zone that's currently sitting around 5,100, right around here. When you drop down to the 1-hour time frame, that becomes more clear. And then we have our psychological resistance that's sitting at that 5,000 mark. 5,000 mark is pretty much where we get the indication or the confirmation that price is going to continue pushing back up bullish, and we're looking for those continued buy opportunities. If not, we had a massive rally down here to the downside, a massive sell-off coming right back into 4,600. So if price does hold on to a support, I'm still expecting price to come back closer to the 5,000 mark, hold on to a resistance, just so we can create that healthy bear structure here with those higher high and higher low formations. So we had a massive sell-off here. I want to see a retest coming back into that 5,000 mark, which is those massive previous consolidation areas, and then another sell-off. If that happens, then we're going to be targeting 4,600. But either way, we're still going to capitalize off of this move here. And then if price can hold on to a support above 5,000, then we go into 5,100. And then this is going to be the clear pivot point for those continued buy opportunities to the upside. We also see here that the major demand zone is sitting right around 4,600, which is where we had that massive bottom rejection already on the current 4-hour and the 1-hour time frame, and then a push back up. So let's see if we can hold on to a support basically into these areas and then a continuation back up. Let's come over to USDJPY and same thing. Let's take a look at what's been going on here from the higher time frames. This is one of the most volatile Forex pairs right now, and we have seen that in the past week too. We see when we drop down to the daily time frame, just so we can see the price action more clean, is that it flushed from that 159 level down to 152, and then it rebounded aggressively here again, which is a liquidity sweep and not a trend reversal. So some of our key levels here are going to be that 158, or let's just do 159 to bring it back up. So 159, which is a major resistance. And then we have our 156 level, which you can see on the daily time frame is a major support right here. And then we have a nice little support area as well, right around here at around 154. If you look to the left, you can see that support, a quick little retest, and then a massive sell-off from there as well. If price can break below that area and continue pushing back down, then we are targeting 152 once again as the liquidity low. Drop down to the 4-hour time frame. Look to the left at each of these levels. You can see again 159, of course, that was the massive sell-off. But even 156, that's a very strong level. We can see that price keeps consolidating around this area, or it'll do a retest and it'll give us a new low to come back. Even 154 seems to be a major pivot point here as well, with a lot of consolidation, retest, and then higher high and higher low formations as well when price was in a bullish trend. Drop down to the 1-hour time frame, and then same thing here, where I'm looking for a massive sell-off that happened, and then after that, price, even if it's a short-term corrective move, coming back into 156 area, or at least a little bit closer to that. And then if price breaks back down below, let's say 154.7 or 154.8, comes back down there, I'm looking for a quick sell opportunity to come back into 154 level. But overall, what I'm looking to see is if price can give me these short-term corrective moves where you have that massive sell-off. Even if this is just a correction, we can still capitalize off of that to come into 156 or a little bit higher into 156.5, which is this massive consolidation here as well. And then a continuation right back down If we see that the JPY strength continues or the volatility around JPY continues, then we're looking for those sells to come back first from 154.7 or 154.8 into 154 area, which should give us about an 80 pip move, and then a continuation right back down into 152 if we need to come back into this previous liquidity low. For any buy opportunities, we wait for a price to break above 156, hold on to a support, and then a continuation right back up. Let's take a look at GBPJPY. Let's come on to the monthly, and we can see that we had a massive sell-off here in 2008, and that's pretty much the same exact level that our price is sitting at the moment. So we're going to mark off that 214, let's say 0.1 area. That's where price is at right now. We come onto the weekly time frame and we see these massive top wick rejections and then a consolidation as price is approaching that resistance here too. So overall, on higher time frames, this pair is still quite bullish, but clearly it's struggling near that resistance level. What we can also do is mark off a support right here into that, let's just say 210.7. Drop down to the daily time frame. You got a ton of consolidation around this area here again. Drop down to the 4-hour time frames. I'm looking for any potential day trade opportunities or even short-term scalps around here. So what I'm going to do is mark off my midpoint level, which is where I'm looking for any massive consolidations, which is this resistance around, let's say, 212. So that's my midpoint level. If price can hold on to a support here and then continue pushing back up bullish, we do have a gap here. So I'm expecting that price will come back and give me some sort of a bottom wick or something like that, and then a continuation back up. Then I'm looking for those buy opportunities to continue to the upside, targeting around 213 first and then that 214 level. But if this is simply just a corrective move of this massive sell-off that happened, simply a correction and then a push right back down, then I'm looking for sells below that 211.5 area, coming right back down into that 210.5. Drop down to the hourly time frame and you see all that consolidation here. So if you want, you can adjust this 210.7 level down into 210. That's perfectly fine. But overall, right now, we don't have clean direction on where this pair is headed. So we're just going to be taking quick scalps. And then if those scalps can turn into swing trades, then we're absolutely going to do that. But price needs to exit out of these consolidation areas here first. Otherwise, this is just going to be range trading and then just trading, from zone to zone, and not really have any sort of clean swing trade opportunities. Now, same thing here on EURUSD. On the weekly time frame, we're sitting at pretty key levels. Let's go ahead and mark off the previous top wick rejection from last week. And I'm just going to say 1.2. And then I drop down to the daily time frame, quick little fake out, price held onto a resistance, and then push right back down. So EURUSD here just delivered a strong bullish impulse right into that, let's say, almost 2-1 area. And then that was followed by that profit taking that happened in the last couple of days, but not a massive one here just yet because we did have a nice rally up to the upside. So that's our resistance at the moment that we're targeting. The current price is currently sitting at 1.187. If I can see that price breaks below, let's drop down to the 4-hour time frame. If price breaks below that 1.185 area, then I know that we're looking for more profit-taking sell opportunities to the downside, and then we would be targeting any of the previous swing lows. So first targeting down here, and then a continuation down, coming back eventually to these areas. So here and then down here eventually. So that's our support right now, around 1.175 or even 1.172 area. And then if price continues pushing back down, then we're looking at around 1.165 area, anywhere here basically. You come up to the daily time frame and you can see those candle closures a lot more clean. So that's the next area that I would target if price continues to break below here. The counter trend short opportunities are only going to be valid if, again, price gives me a quick little retest on the lower time frames, let's say on the hourly or so. Look for a pushback up into that 1.9 area. Give me some correction after price held onto a support. It was just a straight sell into that 1.185. So give me some correction here, hold on to a resistance, and then look for those further sell opportunities here. The higher probability trade here is really buying the EURUSD pullbacks on a sweep and then just reclaiming back into that 1.2 area. Let's go ahead and move on to GBPUSD. Come on to the weekly time frame, and it's pretty much the same exact candle print as EURUSD. We saw that GBPUSD pretty much exploded closer to that 1.387 area right here last week, and then came right back down and closed at a very weak bullish candle. So let's go ahead and mark off. I'm going to say 1.387, drop down to the daily. Pretty similar price action as EURUSD here. So again, we're not chasing momentum on either of these pairs. We're simply going to wait for some clean support or resistance levels to be formed and then look for our entries. Drop down to the 4-hour time frame. You see that consolidation on the 4-hour. That's exactly where price came back and tapped into right when Asian session opened up. But again, for both of these pairs, we're going to see more movements during London session or even New York session. Drop down to the 1-hour time frame, what I want to see, even for scalp opportunities here. For my major pairs, I usually treat them for swing trade opportunities. I don't usually trade them for scalps or day trades. They're a lot slower. And we have other pairs or other assets that we trade that are much better for our scalps or even day trade opportunities. They give us much better returns, which is going to be the equities, any of the minor pairs, and even gold. For this, we see that on the hourly time frame is sitting within consolidation, so nothing here just yet. But if we can get a retest into this level and then a push right back down, then we're looking for sales to come back into 1.367, come back up to the 4-hour time frame. And then I see that there's obviously clean price action here to the left. So the next major level that I would target for my ultimate TP with, of course, profit taking in between is going to be down into this 1.36 level. Let's come over to NAS 100. So NASDAQ, even on the higher time frame, is still very range bound. We have our key resistance levels. $25,800. We have our support. That price just keeps ranging into at 40 or 25,200. Drop down to the daily, and we're pretty much sitting in this massive consolidation here still. So same thing here that we have been doing for the last, I don't know, like 2 weeks, which is just a zone-to-zone trade opportunity. So if price holds onto a support here, gives you another push back up, we're just looking for those buys to come back into 25,800. And then if we see some sort of retracement, it's just going to be a zone-to-zone trade until we get better data, potentially from NFP, even PMI data that's about to come out this week. So we have a lot coming out from an economic data perspective that this market is, or this asset is going to be more reactive to. And then, of course, any earnings that will be coming out as well. Let's come over to US 30. US 30 also sitting in a range where you have the previous resistance at around 49,500. We've got our support levels right here, 48,200. Drop down to the daily. We have some clean support areas right here that price keeps tapping into and rejecting. Drop down to the 4-hour time frame, and we see those candle closures much more cleanly, where you basically you're just looking for that zone-to-zone trade here once again. Drop down to the 1-hour time frame. So what I'm looking for here is on Friday, New York session, we held onto a support, price push back up. So here, if price can hold onto a support and then push back up, this pair actually pays off a lot better compared to the major pairs when it comes to scalping and day trading. So I would look for those buy opportunities to the upside. After price breaks past this level right here at 48,900, then I would look for a continuation back up, potentially for these wick fills right here from Thursday, and then a continuation up into 49,500. If price simply taps into that and then pushes right back down, then we're looking for sells from 48,900 coming right back down into 48,500. There's a very high potential that price can continue pushing back down into 48,200, but we need to break past that support, which is a very strong support right now because we haven't had any sort of catalyst that's really going to push US 30 or NAS 100. Like I said, these are more earnings driven right now rather than the macro fundamentals that we just covered. So overall for this week, some of the main rules that we're going to be following is we're going to let the liquidity get taken first. We're going to wait for our confirmations. And we're not going to be taking a lot of trades this week, but we're rather going to be looking for more quality trades. So I'm not taking 5 random trades. I rather look for one trade that I can hold on to for a couple of days, which is going to pay out much better. Before you go, 2 important resources that we're working on for traders. The first is the SharmaFX Market Intelligence Brief. It's a free newsletter for Forex traders and investors where I'm breaking down the macro fundamentals, central bank policies, and market sentiment. And I'm basically translating it into actionable trading buys for you guys. You can sign up on the SharmaFX website. The link is going to be in the description. Second is that the applications are open for the SharmaFX 12-week trading accelerator. It's not a trading course. It's a structured training program for Forex traders, gold traders, and index traders who want consistency, discipline, and professional grade execution. You're basically going to be building out your own trading strategy that works for you with the data that you collect, and I will be giving you feedback throughout the process as well. So free market intelligence brief is in the description. And then if you're serious about leveling up as a trader, then check out the 12-week accelerator that we have. I'll see you guys in the next weekly outlook.